Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner has a day off. Over the weekend, U.S. and Chinese officials said that they had agreed to a framework of a deal on tariffs and other issues. The trade negotiations happened in Malaysia, and this comes ahead of President Trump's meeting with Chinese leader Xi Jinping later in the week. Treasury Secretary Scott Bessent was part of the U.S. delegation that went to Malaysia for those trade talks with China. He says that Trump and Xi are expected to reach a deal to avert a new 100% U.S. tariff on Chinese goods. Here's Bessent speaking on NBC's Meet the Press.
President Trump gave me a great deal of negotiating leverage with the threat of the 100% tariffs on November 1st, and I believe we've reached a very substantial framework that will avoid that and allow us to discuss many other things with the Chinese.
That was Treasury Secretary Scott Bessent speaking on NBC's Meet the Press. Bessent went on to say that he expects China to make, quote, substantial soybean purchases, as well as offer a deferral on sweeping rare earth controls. For more, we heard from Bloomberg's China correspondent, Minmin.
The two sides had 2 days of talks. The first day was 5.5 hours long, and it does look like both sides are, they seem pretty satisfied with the outcome so far. At least from the Chinese side, the Commerce Ministry put out a statement saying that the talks were candid, in-depth, and constructive, and they had agreed on a range of issues, everything from fentanyl to export controls to shipping levies to agricultural imports. If you read between the line, of course, that statement was pretty vague so far. It's just putting out key sort of themes there. But you read between the line, any sort of progress on fentanyl, for example, could potentially mean a reduction or removal of the 20% fentanyl-related tariffs. Of course, those agricultural imports, a big win for President Trump because it really targets his political base there. And the U.S. has said they are going to remove the threat of those additional tariffs. Whether or not the existing tariff, though, will be brought down, that is the big question. If it stays at the current level, the tariff truce being extended, China still has about 40% tariffs, effective tariff level, which is about 25 percentage points higher than other countries. And it's still going to be quite a disadvantageous position for Chinese exports. But still, all signs point to a thawing of relations between the two sides, and it would at least buy a little bit of a reprieve and remove all that uncertainty when it comes to U.S.-China trade.
That was Bloomberg's China correspondent, Minmin. We go to Japan next, where the Bank of Japan is widely expected to stand pat at this week's policy meeting, but chances of a near-term rate hike are rising given the currency's weakness, which risks pushing up domestic inflation further. For more, we heard from Takahide Kiyuchi, Nomura Research Institute executive economist and former BOJ board member. He spoke to Bloomberg's Sherian and Avril Hong.
The Bank of Japan this week not necessarily expected to move. When are you expecting the first rate hike action coming from the BOJ, and can they do it given this new political environment?
I expect that the BOJ will move at the December meeting instead of the meeting this week. But maybe condition is Mr. Takaichi will change his mind in preventing the BOJ from increasing interest rate.
It's really interesting because we talk about the independence of central banks, but at the same time, it's not like that BOJ can actually just completely ignore the political environment. But at the same time, we do have households really reeling from higher costs, really nationwide. How much of an issue is this?
Yeah, I think it's a very serious problem. If that Mr. Takaichi try to block that rate hike of Bank of Japan, that could cause that the weakness of yen, which is pushing up the prices and undermine that consumption of household. But on the other hand, Mr. Takaichi argued that maybe supporting that household which is suffering from that price increase could be a first priority of her economic policies. I think that two arguments seems to be inconsistent. So I think that the people must start to criticize if that the Takaichi action on the BOJ will cause it to weaker yen. Such kind of increase of public opinion could gradually or steadily change that Mr. Takaichi is hawkish stance on the BOJ, and she have to weaken her policies stance opposing to the rate hike of Bank of Japan by the end of this year.
Takahide, in her speech in Parliament, I think the idea of addressing the cost of living issues would appeal to the public. At the same time, though, is she in a way constrained with how expansionary her policies can actually be, given how this might impact the market? How does the conversation then shift to beyond what she might do, what she should be doing?
Yeah. I think that in the short term, she is likely to implement the two different policies. One is that the reduction of tax on gasoline, and the other one is subsidy for the electricity and the gas to reduce their prices. So I think that she's likely to implement these policies next month. But in the long term, I think that she may planning to introduce some reduction of income tax. And so I think that such a policy could be expansionary. So you know that Ms. Takaichi raised two policies as pillars. One is that the expansionary fiscal policy, and the other one is continuing that easy monetary policy. I think that these policies are continuation of that first and the second arrow of Abenomics. However, I think that she's very extreme policy will not likely to implement it because that the Japan Innovation Party coalition partner of the LDP dislike that the expansionary fiscal policy, and it's respect that the healthy fiscal conditions, and also that the party tend to respect that the independence of Bank of Japan. So as a result, I think she have to accept that the opinion of the Japan innovation parties and weaken her very extreme policies. So anyway, otherwise, if the Japan innovation parties will leave that coalition government, it's possible that the LDP will lose the majority in parliament and lose that the government. So I think that maybe innovation parties has a very influential to that policy of Ms. Takaichi eventually.
Hi, Takahide.
Yeah.
I wonder also, when it comes to BOJ policy making, do you see some cognizance about the pressure that the U.S. might be exerting? Because not so long ago, we did hear from the U.S. Treasury Secretary implying that the BOJ is behind the curve. Is that something that will be figuring into their calculus, especially this week when the U.S. and Japanese leaders are meeting?
I think that maybe a currency market, weaker yen and BOJ's monetary policy could be an issue of that meeting with Mr. Takaichi and Mr. Trump tomorrow. And it's possible that Mr. Trump argued that the currency of the value of the yen is too weak, and BOJ's rate hike could correct that excess weakness of the yen. So if that Mr. Trump will raise these issues explicitly, I think it's caused that the sharp yen appreciation and maybe increase that the expectation for a rate hike by Bank of Japan. Anyway, it's very likely that the BOJ will keep that monetary policy unchanged anyway this week. However, I think that that kind of comment of the Mr. Trump could be a kind of that aid for the BOJ to increase that interest rate. And I think that that's caused that correction of that weaker yen. Yeah. And I think it's lead to that stronger yen.
That's Takahide Kiyuchi, Nomura Research Institute executive economist and former BOJ board member, speaking to Bloomberg's Sherry Yan and Avril Hong on the Asia trade. Coming up next, we'll hear from South Korean President Lee Jae-myung about the progress on trade talks between his country and the U.S. here on the Bloomberg Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner has the day off. South Korean President Lee Jae-myung says Seoul and Washington remain stuck on, quote, all the major details of a $350 billion investment pledge. His comments come days before an expected meeting with President Trump on the sidelines of the APEC summit. Lee sat down with Bloomberg's Sherry Yan about the latest trade negotiations between his country and the U.S. Both of them spoke through a translator.
The negotiations between Korea and the United States are proceeding in two areas of security and economics simultaneously. Negotiations in the field of security issues are going very well, but negotiations in the area of economics, especially trade, have reached a preliminary agreement, and we're in the process of hashing out the details. The discussion is ongoing and there are some differences of opinion, but the delay does not necessarily mean that this is a failure. We already have a comprehensive agreement, and we're currently working on the details. So I would appreciate your patience.
When it comes to Japan's deal, there have been some divergent interpretations. Is South Korea trying to make it more specific than Japan's? And if that's the case, could that become more burdensome for Korea later on?
Korea is not Japan. I do not fully know what deal the US and Japan have struck, but from our point of view, we have our own circumstances, and we will reach a rational result that suits us. Of course, the example of Japan or Europe could be a base that we can refer to, but in the end, we must find a way which takes into account Korea's circumstances, that is acceptable to Korea, and also helps the United States in its manufacturing renaissance. As we search for a mutually beneficial path, there will be differences as well as alignment of opinions.
In finding common ground, could the size of the U.S. investment fund become smaller?
The method of investment, the amount of investment, the timeline, and how we will share the losses and divide the dividends, all of these remain sticking points. The U.S. will, of course, try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea. The United States is the leading country in the world when it comes to democracy and rationality. South Korea is an ally and friend of the United States, so we believe that we will be able to reach a rational result that is acceptable to all sides, and this is what has to be done.
Even investing in the U.S. seems somewhat unstable, as we saw with the immigration raid in Georgia. We understand Koreans can now work at U.S. factories with B1 and ESTA visas, but when can we expect a more fundamental solution?
I believe we can find a realistic solution to the visa issue in the not-too-distant future. In fact, the visa issue is less a problem for Korea than it is for the United States. Korean firms are taking risks by investing in the United States. As a result, they create jobs and help the manufacturing renaissance. Providing an environment for Korean firms to quickly build their factories will be in the interest of the United States. If there are restrictions on Korean workers who build factories and train employees, this will stall the construction of factories. Thus, it's in the interest of the United States to quickly resolve these issues.
A highlight of the APEC summit is the upcoming meeting between Presidents Trump and Xi Jinping. How important is this dialogue for South Korea?
When it comes to the supply chain, the world is divided into two blocks facing off each other, one led by the United States and one by China. Korea is situated both geographically and economically between these two. We are situated in between two grinding stones. It's a situation akin to having both arms pulled by China and the United States. This is both a challenge and an opportunity. We cherish our baseline policy emphasizing the Korea-US alliance and Korea-US-Japan trilateral cooperation. At the same time, we do not seek to sever ties or pursue excessive confrontation with China or socialist nations. Korea will continue to cherish and emphasize its alliance with the United States, and at the same time manage its relationship with China.
근데 이미 지금 하나오션의 미국
Already, Hanwha Ocean's U.S. subsidiaries are caught in the middle, though. Are you concerned that other Korean companies might become targets too? And do you feel this is somewhat an unfair situation?
한국의 미국 진출 자회사들에 대해서
From Korea's point of view, it's very regretful and hard to understand that Korean subsidiaries in the U.S. have been sanctioned by China because we were cooperating with the United States. It's highly likely that this is China's way of applying pressure, signaling that such incidents could continue to occur in the future. Despite this, we'll continue to pursue our basic stance, which emphasizes the United States while working to maintain good relations with China. In any case, we will not directly face off against China. On the outside, it might seem that the United States is very confrontational against China, but at the same time, they continue to ceaselessly communicate and cooperate in areas where possible.
한국은행에서는 지금
The Bank of Korea has left interest rates unchanged again. If there are no more rate cuts, will the government need another extra budget?
지금은 이자율을 낮출
Regarding the economic situation in Korea, the interest rate is not the issue. Rather, it's more a matter of fiscal policy and economic policy. From these three, I believe a stable economic policy is most important. Next would be the fiscal policy that supports economic policy. If we were to lower interest rates, this could stimulate real estate prices, which is already an issue for us. The BOK made the right decision by keeping rates unchanged instead of cutting them. In order to revive Korea's economy and ensure sustainable growth, the fiscal policy of the past may not be sufficient, but it's not lacking either. With additional measures such as expansion of productive financing in areas like high-tech development, which we're focusing on, we'll be able to build a foundation for economic revival and sustainable growth.
너무 신기한 게 요즘에는 부동산 투자를 많이 했잖아요. 저희 부모님도 항상 집 사라.
What's surprising is that people invested heavily in real estate, and even my parents always told me to buy a house first, but now they're saying I should buy stocks. How do you view this new trend of growing assets?
대한민국은 사실은
The truth is, the Republic of Korea is sitting on a very dangerous potential crisis, a ticking bomb that is excessive real estate investment. Just look at Japan. Its real estate bubble burst more than 30 years ago, and the country is still dealing with the economic pain today. Unfortunately, Korea is heading down a similar path. Our property prices are among the highest in the world. If this trend continues, the bubble will inevitably burst. When this happens, it won't just be an economic crisis. We'll face a severe crisis not only economically, but across all sectors. We must prevent that from happening. That means creating channels for capital to flow into more productive sectors of the economy. That's why I've been working hard to remove unnecessary regulations and irrational barriers in our capital markets. We're beginning to see the results. Funds are gradually shifting from real estate into financial and capital markets, and public trust in those markets has improved significantly. You can see the results reflected in the new record highs of the KOSPI index, levels we've never seen before. We need to stay on this course. If we continue implementing national policies that curb speculative real estate investments and direct capital towards productive areas, we can sustain this positive momentum. That's the only way to normalize the Korean economy back to a healthy, sustainable path of growth. We cannot give up on this path.
That was South Korean President Lee Jae-myung speaking to Bloomberg's Sherry Yang.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.